In this video, we'll talk about who the major players are in mergers and acquisitions. Of course, you have your buy side, your sell side, and your intermediaries who put the deals together. We'll start with the buy side. So we have private equity, we have strategics, meaning the corporations who operate in that space. We have mom and pop investors, we'll call people who might buy a dry cleaner, a couple of restaurants, maybe a hotel or two. And then of course we have family offices. Family offices are families who have a great deal of wealth and are looking to expand their investments besides just the equity markets by buying companies. One of the interesting things about the private equity world is that funds keep getting bigger and bigger. It's more and more money chasing after the same deals. And with the corporations, well, they already have a lot of money currently. So we look at the Private Equity International, the PEI index. We look at the biggest 5 companies, meaning the amount of money they've raised in the last 5 years. The numbers are huge, like the Carlyle Group. They raised over $200 billion in the last 5 years. Blackstone, they have over $435 billion assets under management. The Apollo Group, well, Apollo Global Management, and CVC over in Europe, they ran out the top 5. So what's interesting is that the PE, they keep getting bigger and bigger. And then deals keep getting bigger and bigger, which is interesting because they have the move the needle conversation. They need to do deals of a certain size, otherwise it's not worth their time. In other words, if you have $1 billion you need to invest, you can't go buy companies for 25, 30 million because there's only 40 hours in a work week. So they need to keep getting bigger and bigger, those deals. All right, the next category. We're rolling through this real quick. The sellers. Well, sellers could be a big public company and they're rolling off an asset they own, a division. That's called a divestiture. Or it could be somebody who wants to retire. They've started the company, they want to move on to that next chapter in their life. Or it's that private company, they might want to have a recapitalization. They want to raise money by selling off a piece of the equity. They might sell 40%, they might sell 50.1%, they might sell 80%. But this way they can take some chips off the table, they can move some cash from the business into the retirement fund, and they're able to move to that next step in life, right? But yet still get that second bite of the apple. Something interesting about public corporations. Ernst & Young, I guess they're called EY now. They had a big survey. They surveyed about 1,000 CEOs, CFOs, mostly in Europe, North America, and they said 87%, the survey said, 87% of companies plan to divest within the next 2 years. 56% of these CEOs and CFOs said they held on to the assets for far too long. And then 62% of the CEOs said that the company they were trying to resell received lower prices, lower offers, lower valuation because they didn't properly develop the diligence materials to get this company ready for market. Kind of interesting. All right, third category, the intermediaries. Intermediaries is essentially the person who brings A and B together to get the deal done. That could be an investment bank, it could be a boutique investment bank like our company, a smaller company. It could be a broker, a small brokerage firm. Or it could be just Bob, who seems to know everyone and gets deals done. So just think, anything really interesting? All right, give you the numbers. Kind of that range. Brokers tend to operate in the deals that are worth 2 million to 15 million. Investment banks, 15 million and up. And some of them don't touch anything below 200 million. If you want to get Goldman Sachs' attention, well, you better bring something at least a couple hundred million, otherwise it's just not worth time. And then the mom and pop, that Main Street, small business, restaurants, dry cleaners, hotels, right? Typically deals are worth, let's say 2-3 million and below. But these, of course, are all generalizations. So our company, Sterling Concord Partners, Sterling Concord Investments, we help companies sell their company, right, that middle market between 25 million to 150 million, or we help purchase companies, meaning we acquire companies between that 5 million revenue and 30 million is what we're looking all over the US. Of course, if you're here in Texas with us, that's even better. Thank you very much for listening. More videos coming.